releases and then simply say, okay, we are going to book them all in advance and we are going to report about $6 billion. Wow. When they got caught, it was a big issue. But they were not creative and smart enough. So I thought, oh, I learned from them. That's good, great. What about going and looking at the other side of the business? If all you as auditors looking at my revenue and questioning that, well, I'm not going to play with my revenue. I can play with my expenses. Because people are not really so much concerned with the expenses like revenue. And I can try to reduce these expenses. Manipulate them. The same thing in the music. When I'm composing a piece, I can go and take some notes out, and in that way I can manipulate that music. I can erase it. So I thought, what can I do here? What kind of tricks? Well, there is a very nice trick where I have an expense, which is 8 million. It should go to the expense account because it's actual expenses. I say, no. We are going to capitalize that and we are going to add it to our balance sheet. Can we do that? Is it legal? As long as we have a business purpose for it, yes. I thought, let me look at an example. I looked at waste management. Waste management, they actually do recycling of all these, trash they collect, and they are responsible for collecting all the trash in so many cities and states in US. And what they did, they said, look, we have revenue, yes. We have profit, no. So it looks, we have revenue, but we don't have profit. Why? Because we have huge expenses. How can we cut our expenses down so at the end it looks like we have a profit? So they say, look, we have 200 trucks and we have 1 million dumpsters. Why don't we change the lifespan of them? By changing the lifespan, we reduce depreciation. By reducing depreciation, we reduce the expenses that we are paying, so it looks like we are generating 3.5 billion extra in income. Very interesting. Anyone will question you why you change the lifespan. You say, well, it looks like you are taking care of them. They are going to last for better, more than 3-4 years extra. So it's good. I was like, wow, you can do a lot of things with accounting. Very interesting. So I thought, what about looking at WorldCom? When WorldCom, they were actually taking roaming services. So WorldCom, they have contracts with other telecommunication companies, and they are saying all the roaming services that you are going to charge and you are going to charge when you travel abroad, they are not expenses. Your monthly roaming services, they are actually assets, because we are building our international base outside our territory. And they were like, really? Is this the reality? And they decided, yes. They convinced accountants and they booked that, and they reported more than 11 billion in inflated assets. 11 billion of expenses moved from the income statement to the balance sheet. Wow. So you can see all this profit that we are speaking about all the day, all these financial figures are just fake. Accountants, they can create them and manipulate them. And we only have standards and rules. So I thought, wow. If we can do that, we can play a lot. And let's see, how can we play? We can change any of the assumptions and estimates. And for that, if you are smart enough as an auditor, and if you want to catch people who are doing stuff like that, this is what questions you need to ask. You need to ask them, what kind of estimates and assumptions are you using? Why you are including this revenue this year, not next year? Why you are taking these expenses out? This is the first question you need to ask. Then, the question, are you trying to manipulate the financial statement? Are you creating any biases when you are doing that? And finally, what are the effects? What are the implications? What are the consequences? Are investors going to invest with you? Or are you going to obtain loans if you do that? So these are the tricks that people are putting in place. And these are the questions that you need to have. Every time you look at any statement, you need to question it. And ask these 4 questions. Because at the end, we only have estimates. And the controls inside our organization, the internal control over financial reporting, will help us ensure that people inside the organization are not going to play with the numbers. They are going to do the right thing. on what? Based on the standards and guidelines, not based on the direction of the top management who are getting bonuses out of these numbers. So, wow, that's great. Now let me see at this, look at this number. Now what do you think? Look at these numbers. What do you think about these numbers? Do you like them? You don't like them? Let me see if I can get them closer. I can't do anything from it. Can you see, some of you can see the numbers? It looks like, let me explain what's happening here. It looks like in 1999 to 2000, our revenue moved from 40 million to 100 million. Wow, our revenue moved from 40 million to 100 million. It looks like when we look at our total assets moved from 33 million to 65 million. What do you think about that? Good? For you as an auditor, that you are responsible for auditing the 2000 year, you look at other things, or you say it looks like the revenue is good, the total assets is good. Look what's happening with the operating results. What's happening with the net income? It moved from 893 to 979. No movement, hardly any movement. So the organization is getting more assets, is getting more revenue, but no income, hardly any income. But that's not interesting yet. When we go and look at cash from operation, it moved from 2 million something to 3 million. Wow, so the company is actually not generating any cash. The big question here you need to ask, how come the organization generated all this revenue and all these assets increase without actual cash? Right? What happened to that cash? When we go and analyze it, it looks like this. Look, huge increase in revenue, but hardly any increase in operating results. But for me to look at any statement, the only thing I care about is cash. Cash is real. Cash is real, ladies and gentlemen. Right? Cash. Other than that, financial figures are just ink on paper. Nothing. Because cash will reflect if the organization is actually generating money or not. And if the organization is not generating money, the organization is going to go down. Which organization is this? It's actually Enron. This is the actual financial statement for Enron. This is where they committed all this fraud, all this big fraud. Why do you think executives at Enron, at the top level, CEO, CFO, they committed all this fraud? Do they have money? Do they have money or not? Are they getting a lot of money or not? Why do you think people who are at the top level in the organization, they are doing fraud? Because they need more money. More and more and more and more money. When you look at the Association of Certified Fraud Examiners, the last survey, it will tell you inside the organization, the people who are doing most of the fraud inside the organization are you, the accounting department. Very interesting statistics. But remember, they mentioned just the percentage is representing who is doing most of the fraud. But when we look at cash, who is doing the largest amount of fraud, actually is the board of directors, the CEO, the executive management, and the legal department. Very interesting. So you in the accounting department, maybe you do a trick for 2,000, but these people are doing trick for 2 million, for 20 million, for 100 million. Do you know the CEO of Lehman Brothers? Do you know how much bonuses he got? Just bonuses. I'm not speaking about actual salary, just that, leave it aside. $500 million bonuses. Very nice, right? You will ignore the salary, no problem. So these executives, they are looking for the money. They want money. And they want more and more money. They love this money, right? But money is good. if we have money. All these big organizations that they love money, they are progressing and moving on and on and on, like all these big organizations that we used to hear about, that currently collapse because they have money. And as long as the money is inside the organization, they are profitable, everything is good. As long as the money is rolling on inside the organization, the money is rolling in, it's coming, everyone is happy.
When the money keeps rolling in, you don't ask how. Think of all the people guaranteed a good time now. Everybody's going, they're hungry to move home and out the doors. Never been a hungry, the foundation never run.
No one will ask why. Money is coming. Keep it coming. No one will ask.
On your landlord's house, take the family on vacation. If I'm blessed, find that can make your dreams come true. Here's something I have to do, my friends. Write your name on your dream, or a card, or a pad, or a ticket. Throw it high in the air, then shoot out lady the cricket. We will change the world of life, where we go even two. Let me anyone who cares as much as they want to know.
We all love money. Money, we all love money. We all love money, but what will happen when money will run out? We're all scared. That's not cool. We are shaking as executives inside the organization. No money, what can we do? We need to fake the operation of the organization. Make everyone look at the organization and see like we have money as we used to have before, but actually we don't. Other way, we are going to lose our jobs, we are going to lose everything. And this is where people are starting getting creative and saying, how can we actually go and manipulate the numbers? How can we create all these figures to show that we have actual money? How can we keep the music playing inside the organization? Because once the music will stop, everything will stop. Sound please. Higher person.
Well, sir, if those assets decrease by just 25% and remain on our books, that loss would be greater than the current market capitalization of this entire company.
So, what you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism.
Sir, I'm not sure that I would put it that way, but let me clarify, using your analogy, what this model shows is the music, so to speak, just slowing. If the music would stop, as you put it, then this model wouldn't be even close to that scenario. It would be considerably worse.
Let me tell you something, son. Do you care to know why I'm in this chair with you, or I mean, why I earn the big bucks?
Yes.
I'm here for one reason and one reason alone. I'm here to guess what the music